Hello Maverick traders, this is Imri and welcome to today's market roundup. Okay, let's get into some market analysis. So it's been a pretty positive day for equities and cryptos. The cryptocurrency market in particular did very well today, outperforming equities considerably. But equities bounced as well, and they continue to bounce from last week. Now, if we look at the S&P 500, this is the cash index. You can see here we're trading within this down channel. And while this bounce does look encouraging for the market, I'm not really going to think too much of it unless we can break up the upside of that channel. So I think this channel is pretty straightforward. So long as we're trading within the channel, I would expect to be able to sell near the top of that channel and to buy near the bottom of it. That being said, we do have the 20-period moving average coming in right now at 39.48 in the S&P 500. So that would come in before we reach the upper boundary line of that channel. So it's just something to watch out for as a potential area of technical resistance on the price chart. Going over the global stock market index, we don't have the same kind of parallel channel there. What we have is this broken support level, which is now functioning or should function as resistance, and that comes in right around 87 on the price chart. So I wouldn't be surprised to see this bounce continue and test that support level or that broken support level and to see if the market will treat it now as resistance. And over in cryptocurrencies, this is on the daily chart. Okay, and on the daily chart, this looks a little bit like a base that's forming, and we can see that we have the moving average resistance overhead as well. So if we do break higher, it's possible this turns into some kind of bear market rally rather than a bona fide full-fledged reversal. For this to be a full-fledged reversal, I'd really want to see the market break above this area of consolidation here in this equally weighted index that we have. Now that being said, once we talk, when we get to a little bit later in this market roundup, I'm showing you some potential trading ideas. Cryptocurrency will be a part of that presentation. So I'm not going to spoil it right now, but there is potentially a long setup that's forming in cryptos if you're feeling adventurous. So we're going to check that out a little bit later. But on the daily chart, this is unquestionably still in a downtrend. Quite oversold, however, as we can see from the RSI reading down here. I'm going to give the market a +1. Yes, I get it. We're trading below both moving averages, and the moving averages are sloped lower. But in the fairly short term, I think this bounce is going to continue. It does look to have some legs underneath it, and I'd look for it to at least test the 20-period moving average, if not the upper side of this parallel channel that the market's trading in. In terms of the weekly calendar, there isn't really too much going on for tomorrow. The Bank of Australia Governor Lowe is speaking sometime around 7:30 a.m. Eastern time, but I'm not too sure that's going to move the market considerably for the Aussie, just as that's heading into the New York session. So we'll see if it does create any short-term volatility, but I really wouldn't be counting on it too much. Now, heading into some currency analysis. First off, we've got the cryptocurrencies, and Solana was the outperformer on the day, followed by Ethereum, Litecoin, and Cardano. And Bitcoin Cash did very well themselves, up just over 4.5% and just over 4% respectively. So it is a good day overall for cryptocurrencies, and these percentage moves look a little bit interesting or exciting even, but in terms of velocity, as we'll see in just a little bit, there isn't much there. Cryptos are just broadly trading sideways. Over in the fiat currency world, the yen was the outperformer of the day today, which further reinforces my belief that right now the yen is not trading as a traditional risk-off haven. And part of the reason for that is the interest rate differential between the yen and all the other currencies, or most of the other currencies. The Bank of Japan it remains to be seen how fiercely they're going to defend the yen, but the yen's been extraordinarily weak right now. So I think what we're seeing today in terms of the yen's outperformance has less to do with investors flocking to the yen and more likely to do with investors unwinding short yen positions. It's getting to be an extremely crowded trade, and one day that unwind is going to be violent and fierce and an extremely exciting period of time to be long yen. But I don't know if that day has arrived. I don't think this is the beginning of a dramatic reversal in fortunes for the yen, but we'll see. I'm happy to be wrong on that. And it's been more or less flat across the board elsewhere. The biggest losers on the day include the euro, the Canadian dollar, and the Aussie, but I mean barely. In terms of percentage moves, those are pretty muted movements across the board. And so it's no surprise that on the velocity side, I just really don't see too much. And that's not necessarily a bad thing, because periods of low volatility lead to periods of high volatility. So right now I'm feeling very much like it's a calm before a storm. I don't know what direction things are necessarily going to break right now, but I kind of like it when there's this little volatility in the market. I get it. It's boring for today and it might be boring for tomorrow, but it just means that the market's coiling for a much larger move in the near future. So with that said, we're going to get into some possible trades, and I don't have too much, but we are going to kick it off with the cryptocurrency basket first. So like I said, on the daily chart, this is unquestionably in a downtrend. We have moving average resistance up ahead. The moving averages are sloping lower. And we were due for a little bit of a bounce given how oversold the relative strength index was. That being said, when I drop down to a 4-hour chart, we're getting a little bit of a phenomenon like we saw back in May and early June, where the market traded sideways and then broke down sharply. The reason this is interesting to me is because we're either going to trade sideways again and then we'll have a break either up or down, or this could potentially be the beginning of a little bit of a reversal in the fortunes of cryptocurrency markets, dare I say that. So we'll have to see. For this to become a bona fide bullish power reversal, we'd really want to see a break above these moving averages, find support on the moving averages, and then look for an explosive move higher. So the ingredients were there for that move back in May. We broke above the moving averages, but we really failed to hold those moving averages as support, and so the market broke lower. So we'll have to see. I'd really want to see the market base on those moving averages in order for a setup to go long, to materialize. But the possibility is there. So I'm not saying we should rush out and buy cryptos just yet. We need a lot more price action to unfold before I'd feel confident giving that kind of analysis or forecast on the crypto market. But it's at least encouraging to see that we've tested these moving averages on an intermediate term time frame like the 4-hour chart. Let's see what happens. The next currency that I want to look at is sterling Aussie. The reason I want to look at sterling Aussie is because I mentioned this area on the price chart before. The last time we traded into this area, I said we're either going to break higher or lower. Don't know which way it's going to go, but the move is going to be tradable either way. And we did get a large move to the downside. So here we are back again. Again, I don't know if we're going to break through this area. Third time's the charm, maybe. I don't know. But either way, the move is going to be tradable, whether it's a breakdown or a break up. So we're in the right area of the price chart in order for volatility to pick up. So that's what I'm excited for. And then dollar Canada. All right, so here's what I'm looking at in dollar CAD. We've basically traded into some significant resistance to the upside. Just going to drop down to a 4-hour chart. You can see here, this is a potential double top in the making. The only thing that I don't like about this potential double top is that usually I would want to see sharp bearish divergence between the left and right tops, and we don't have that here. In fact, the momentum signature got more pronounced as we traded into this second top. That being said, I still think we can look for a little bit of a pullback here. So in my ideal world, we're going to get a pullback to test this prior low around 128.60, and then I'll be looking for a buy opportunity down there. So I mean, I know those are not small pips to the downside, but I would wait for that downside move before looking for a buy opportunity. I don't want to be buying this currency pair with overhead resistance right above. On the other hand, if we break above this resistance, then I'd look for prices to stabilize and treat that broken resistance as support in order to look for an opportunity to go long the market. And if we don't break immediately lower and we trade into this zone and we just kind of meander along and I start seeing a divergence in the momentum indicators, a little bit like what we're seeing right now, then that would be an exciting setup to go short. So I understand I'm not giving you a lot of conviction in terms of direction one way or the other in any of these potential trades I'm identifying, but to me that's not all that important. The direction is not as important as where we are trading in these price charts. So in dollar Canada, we're trading in an area where there's highly likely going to be a good move one way or the other. We don't need to know which direction it's going to break out to take advantage of it. The price action will leave clues, a tradable clue. So whether it's a base or a pullback or a reversal, there will be some clues on this price chart as we trade into one of these two zones. That's going to lead, in my opinion, to an eventually a high probability trade with an excellent risk reward profile. And it's the exact same thing in sterling Aussie as we trade back into this resistance zone for the third time. So I hope this video, I hope this overview of potential trades was helpful. It gives you a couple things to look at. In terms of what's most immediately actionable, it's probably sterling Aussie just because we're already in that zone. And if I go to the shorter time frame charts like the 15-minute, I can see some divergence here in the MACD and prices are trading higher. So let's see how this plays out. I wouldn't be surprised if we got another reversal in sterling Aussie out of here. So in conclusion, equity markets have bottomed, but it doesn't, when I say bottomed, I don't necessarily mean the bottom, the end to the bear market. I just mean that we bottomed. Doesn't mean that we're going to see a sustained bounce. I think the market's still looking for leadership here. Make sure you're always looking to pair up relative strength and weakness. And remember, just because volatility is low right now, or velocity is low right now, doesn't mean it's going to stay that way. In fact, this is like the calm before the storm. And I expect that in the next week or two, we're going to see that velocity pick up significantly in a few currency pairs. So thanks everyone. Have a great trading day tomorrow. And if you're not trading, that's all right too. Not every day is a trading day. I personally don't expect to be trading around a whole lot during tomorrow's session, but I'll be very excited to see how we end the week. And hopefully that's going to set us up for some excellent opportunities heading into next week. Thanks everyone. Take care. See you soon.